So good evening, everyone, and a big welcome to all of you for this Vanderbilt discussion as we are 1 week ahead of our public launch. And I think super excited. Tonight is very much a short, sharp discussion to allow all of you who are on this call, and I know quite a few of you will be joining as we speak. So probably just going to give everyone a bit of time to join. But really the objective is to get the right people around a virtual table from developer to finance to short-term rentals and sales and be able to unpack the product, answer any questions, and really be able to give you all the insights you need prior to the launch next Thursday at 11 o'clock. The product itself, I think, speaks for itself, and I think the massive volume of leads and interest and engagement we've had, which has been off the charts, to be totally honest. So I think it's less about selling the product and more about what the mechanics are and the understanding of what units work best, getting a better understanding, get a better understanding of the process so that you can almost use being part of this webinar tonight as a bit of an inside track to be able to make sure that you get the units you're looking for ahead of anyone else come launch day itself. And I know we always talk about launch successes and we talk about everything, but when you look at the volume of interest that's been generated in the 5 weeks that this campaign has been live, the level of engagement, the volume of people chatting to Uber directly from a pre-approval perspective and so forth. I mean, from my experience, have no doubt that we will sell all 77 units on launch day. It's just a question of making sure whether you can get the right units, and I think that's really what today is all about. So, just by way of introduction, my name is Stefan Buerta, and I'm Director of Rainmaker Marketing, and super privileged and fortunate to be the marketing team behind Vanderbilt, and really excited about what's being put together from a architecture perspective, from a product offering perspective, and obviously from a pricing perspective. And then, and then just to introduce the rest of the team, we're going to keep tonight sort of 40 to 45 minutes. We encourage you to ask as many questions as you possibly can. It can be done in the chat function down below. Anything you want to know, pricing, levies, how sustainable is the market, what yields you can expect, anything we're here to answer this evening and to make your life easier come next Thursday. There will be a recording of this, which will be circulating to all of you tomorrow by email, which means you can forward on to business partners or family or whatever it may be to cover all the different questions. And that'll also be available in the interactive marketplace. But I think just by way of introduction, I don't know how you see everyone on the screen, but Leon Rousseau, who's the sales development specialist, part of the development team for Vanderbilt, and definitely the best salesperson I've ever come across, which says a lot. So yeah, how's it, Leon?
Like a privilege to be here. Thank you.
Danny Muckett, who's the developer of Vanderbilt, also developer of One Stellenbosch, which if any of you have the privilege of going to, has really transformed student accommodation within the country, and also part of the development team of the Rockefeller. So how's it, Danny?
Hi, good evening, everyone.
And then finance is always a big thing, and Uber, who have walked a journey with this specific development team through One Stellenbosch and various other projects, a really key component of this whole process. So a big welcome to Bronwyn Phillip, who is the dedicated consultant on the project for Uber.
Thank you so much. Evening, everyone.
And then the short-term component is a really key fundamental of this product offering, in the sense of a managed short-term solution, which Prop R, in my opinion, do better than anyone else. And really excited to have Andrew Wilshire-Preston, who is the Senior Business Development Manager for Prop R, just to talk about what's happening in the area, what can be expected as a service offering for Vanderbilt, and just be able to answer lots of questions. So how's it, Andrew?
How's it, Stefan? Thanks so much. Happy to be here.
Okay, guys. So yeah, we're gonna jump into it pretty quickly. I mean, product-wise, we'll chat about it. I think for anyone who's on the chat now and doesn't yet know, Vanderbilt is 77 units, studio, 1 and 2 bedrooms, pricing from 1.4, launching next week, first come, first serve, fastest fingers first. We'll go through the marketplace in a little bit in terms of how to navigate it. Many of you probably would have already have navigated it, how to chat to the sales team and so forth. But yeah, super exciting. I think Danny, I mean, we're going to kick off now. Like I said, we're not going to go too much. We're not going to try and hard sell the product. I think we need to do that, but I think we need to go into the fundamentals of what every single investor is going to be thinking and wanting to know. And I think for me, having chatted to a lot of guys, the elephant in the room is how is it that you've managed to bring a product to market at the price point that you have? And I think we're talking ticket price, but we're also talking price per square, because you know what the impact that has in terms of your yield, but also has an impact in terms of the capital appreciation you can see off that base. And I think that is the key question. Well, what's the catch, and how have you made it work?
So I think, listen, important to understand the history of the precinct. So this building was brought together with the adjacent two land parcels, kind of pre the Cape Town boom, sort of 7, 8 years ago. And on the one parcel, Rockefeller was developed, the 19-story tower adjacent to this. And this commercial building, which was the existing building in the precinct, remained. And obviously, we've historically bought it at a competitive price pre the Cape Town run that everyone's seen. Coupled with that, we've got extensive experience in converting buildings all over the country. We've done thousands of these units. Our team, sources material around the world. Our conversion team is really well versed in this process, and we've done this many, many times. I think the other thing is we're not pricing what the market's expecting, which, with all due respect, a lot of developers are doing. We're ground up pricing this at the cost to convert and fair margin, and then offering it to the market. So we haven't adjusted our prices, over the last 6 months, where we've seen massive inflation in the prices that developers are charging. This is the price we were going to do 6 months ago. We're looking to offer fair value to the market. We have, additional buildings coming to market in time, kind of during the course of next year in Cape Town, which will be revealed kind of in the first quarter of next year. We're not looking to, to absolutely fleece everyone at the prices that we're seeing some products being developed at the moment. This is a fair market price for a great product in a good location, and we're looking to sell everything on day one. And that's how it's been priced. So we're not chasing the market up. We're sticking to our guns. This was the price Steph and I discussed sort of 6 or 8 months ago, and we're just looking to develop this product, sell it quickly on the first day, and deliver it to happy buyers and leave some kind of meat on the bone for them, so that there's net asset value in the product for the buyer on the date of delivery, and they'll buy from us in the next development. There's nothing worse than trying to force transfer on people who are out of the money day one. This is being, there will be very likely upside in buying here at launch day. And if we can achieve that for our buyers, they'll just keep coming back. And we've done that in previous developments, and we'll continue to do that to the best of our ability.
Okay. Yeah, I mean, I think, it's quite interesting. I think when we present that market research study in terms of recommended pricing, and there's the low road, which is the fast sale, cheaper prices, and then there's the high road, which is the high prices and potentially longer sale. And very seldom the developer takes the low road. So it's very refreshing when it's okay, cool. What can we sell quickest, and how can we leave something in it for the buyer, which is really awesome.
Must have been 8 months ago in the cinema at the one in Stellenbosch,
Yeah.
projecting those prices, and we've stuck to those low road prices because it's feasible for us. And yeah, we held out, we stuck to that low road pricing, and it works for us financially, and it's going to work for our buyers long term, and that's most important.
Yeah. And then Danny, I mean, just to follow on from that, I know you and Leon and Bronwyn have walked a massive road on one Stellenbosch, where if you walk into it now, anyone, like I said, it's facilities on a totally different level. And then I see a huge component of that has been taken into the Rockefeller, although it sort of happened at sort of similar times. And then I think you launch a product now and you've got the instant benefit of existing facilities with the Rockefeller next door effectively being one and the same. I mean, can you just explain the integration between Vanderbilt and Rockefeller?
Yeah, absolutely. So, I mean, this precinct, which is obviously being developed by multiple developers, adjacent and across the road from us, is really burgeoning into something really good. The nice thing for Vanderbilt buyers is they're not first. Rockefeller was developed, it's now about 3-4 years ago. It's now really producing the goods. It's got a great restaurant offering, a brilliant gym, a swimming pool on the roof with a great adjacent bar. Now with the spa added recently, this building will have a deli, confectionery, and kind of quick shop. So, a convenience store. So, we really are creating all-encompassing precinct, live, work, and play. And so, there is real benefit by being second here in the fact that Rockefeller set the tone for the area, and there's benefit to the buyers here in the shared amenities.
Yeah. And I mean, we'll chat to Andrew in a sec about the yields and the returns, but I guess the amazing thing is you're coming off a proven recipe in terms of what occupancies can be achieved and sustained. And I know we've spoken about a lot the benefit of having a conferencing facility and so forth, and just in terms of how it does push up. And every time we chat to the management team at Rockefeller, they're saying, well, had they had 50 or 60 extra rooms when they need it would make such a huge difference. And you throw the proper engine into that. Yeah, I mean, that's what I find super exciting.
Absolutely.
Um,
I mean, Rockefeller, I think if I can just chime in there, Rockefeller was obviously developed more as a traditional hotel run by a hotel management company, much not available to the Airbnb market. So there obviously is a whole pool of investors who specifically want, to self-manage or manage through a proper that kind of hosting service and then make use of the unit themselves for part of the year. And this building can tick those boxes in the fact that you can make it available, on the Airbnb platform through proper or for self-use during the times when you need to use it in Cape Town. So, it's got additional benefits. But traditional hotels have their own benefits as well in the fact that it's a much more managed and curated solution. But this is a more flexible solution. So each attract their own type of buyers.
yeah. And I think I just want to try and bring in as many of the questions as we can. First couple might go to Danny, and then I think Andrew going to bring you in, and then Leon and Bono. I'm not going not going to leave you guys in the cold there, but I think just a couple of questions. So first one, do all units face the same direction and have the same exposure? I just want to get into the meat of it, so because I think it's vitally important that we get these questions out the way. Can you just answer that one quickly, Danny, and then to back it up, what is the occupancy date and are the units already ready to be occupied?
Okay, so the answer to the first question is no. There's two components to the building. One is sea facing, and that's, facing onto the Cape Town Harbour effectively, but one row back, and the other side of the building back facing onto the mountain side of Cape Town. So the view is not all sea facing, and certain units have encumbered views and some unencumbered views. And in time, other people may develop buildings in front or behind this building, and views are just simply not forever guaranteed. But at the moment, you are able to see your view due to Rainmaker's great tech platform. You can literally go on the website, choose your unit, and see a drone view of that specific unit's window views at this point in time. Again, that can't be guaranteed indefinitely, but those are the views at the moment. And there's certain units where the views are unlikely to ever be encumbered by any further development by anyone else. So, I think Leon would be able to help any prospective buyers with that, because certain of the areas, there's only kind of municipal land or existing buildings. So there simply isn't other land parcels to develop. And that's where views would be, guaranteed more long term. What was the other question?
Occupancy date
Occupancy
and
date. Okay, so
are
obviously
units already ready to be occupied?
it's a conversion of a commercial building. We're on the final stages of planning approval. That's building plans, all zoning, etc. is in place. So we expect, plan approval in this month. We are not subject to pre-sales here, so we will start the minute those plans are approved. This side of the builder's holidays, and we have a program from the main contractor to deliver the building 8 months into next year. I mean, I know that's probably a likely next question. The main contractor here is TriStar. We've worked with them on multiple projects around the country. They're experts in building conversions, having done, countless of them, and many of them with us. So it's not, this is not the lowest tenderer who got it. We didn't tender this project. We negotiated it with the contractor that we have worked with, are comfortable with, and have done countless projects. At the moment, they're on multiple projects for us as we speak. So, yeah, it's not the lowest tenderer or the guy who made the biggest mistake. We work with guys who we literally have done projects with historically. So yeah, that's
Okay, no, that's I think that answers that super well. And then last question to you, just while we're here. I think everyone that I've chatted to has asked the question, Rockefeller, what are the current occupancies, how sustainable they are? Because I think that becomes quite a nice benchmark to be able to assess what our projections look like. So can you just talk quickly?
I think,
Mabashwala asked the question, what is the occupancy rate of Rockefeller currently?
So Rockefeller has been obviously developed through COVID and, was delivered in a very hard time. But subsequent to that has been just an absolute standout performer for buyers. I mean, I was looking just prior to this. In February this year, we distributed net of levies to the buyers there 760 odd rand per square meter. So, that's, producing yields in the high teens to early buyers. So that's the sample case right next door. The numbers used in all sales and marketing documents here are produced by PropR, and they are the numbers that they, believe are achievable in the precinct. They've got other products and other stock in the precinct. They're experts in their field. So we believe them to be very achievable. And should the market continue to run the way we've seen, and our year-on-year growth in this precinct has just been phenomenal. So I think, maybe even conservative, but probably best for Andrew to add some color here, because he's dealing with the daily. What I know is right next door, we've got extremely high occupancy, but in the high 70% would be kind of what, as a through rate, obviously higher in December and February, which are obviously the good months in Cape Town, mining in Durban, and holiday season. But this year, even through the winters, we produced great results for our investors and buyers there. So yeah, we're very confident that the market is ever growing, and rates are increasing. There's constantly additional airlift into the Cape Town airport, and just huge growth in nightly rates. But Andrew would be able to tell us more. He lives with this every day.
Yeah, if you can just jump in, Andrew.
Yeah, for sure. We've got 2 data points that we can refer to, which is quite convenient for us. The first is obviously our own pool of performance data that we can pull from the current properties that we take care of in the area. And then the second is ancillary systems like AirDNA, Wheelhouse, Price Labs, which for anyone who's not familiar with those systems, they provide consolidated analytical data for our industry. So through those systems, we have a live feed of occupancy, pricing data, revenue feedback that we can then use to sort of check our assumptions. And the data from AirDNA, for example, shows that Foreshore is achieving some of the highest occupancy rates in the CBD, with like Danny said, average daily rates that are increasing annually as the area sort of matures, and you start to see more and more direct flights coming through Cape Town International Airport, more and more spillover from the tourism market that's sort of subsidizing or propping up the average nightly rates. And then in this area, you obviously also have a lot of strong demand from conference goers and business travelers, which sort of fills up those midweek days very well, and it gives you very consistent occupancy over a month-to-month basis throughout the year, which is part of the reason why we're expecting such high occupancy in this building annually.
Okay. And then, I mean, the question, I mean, guys always get asked. I mean, when Bronwyn, we were talking about earlier about how banks cringe at the idea of a rental pool. And this is obviously not a rental pool, it's a short-term managed solution. But can you maybe just explain, Andrew, the difference between the two? And also, if you're an owner and you obviously utilize proper for the short-term rentals, how does it work from a usage perspective if you want to use it yourself?
Yeah, so we don't operate a pooling model at all. We market each property for its own merits. With a pooling model, your unit goes into a pool of units, and essentially income expenses are distributed evenly, but essentially your revenue becomes diluted because you could have a sort of more up-spec unit compared to someone else's, but you're getting the same income at the end of the day. It also lacks a lot of transparency because you can't see, which units are being allocated bookings and which ones are experiencing more wear and tear, et cetera, et cetera. And the reporting is just not very transparent in and of itself. So with our system, each unit is marketed individually. They have their own listings on platforms like Airbnb. And that means that there's very much the potential to outperform our baseline income estimates. So if you see one of our proposals, you'll see that we've tried to give buyers some insights into what they could expect to earn for each of the different unit types. But those are very much baseline estimates. And if an individual owner decides to upspec their unit or do something to help their unit to stand out from the crowd, they will benefit from that. There will be, an additional upside. And with our system, you have full transparency. So to kind of help with that, we've built a platform that we call the Client Zone Portal. So owners can log into their Client Zone, and it gives them full oversight of what's going on in their unit. They can see bookings in real time. They can see full breakdowns of those bookings, financial information. They can see how the unit's performing. They can see any expenses that we're sort of incurring on their behalf and covering for them. So it's just a much more sort of transparent and centralized reporting system that you don't really have with a pooling model. And the returns are obviously a lot more favorable. Yeah, that's what we've experienced at least. In terms of personal use, we don't limit that or restrict it in any way. So owners can use their unit whenever they want to. And that's kind of part of the value proposition to doing short-term rentals, is that you have the flexibility to use the space whenever you want to. You obviously earn more than you would on the long-term rental market. There are better returns, and there's no hassle. We take care of all the hassle for you. But yeah, you can use your unit at any time of the year. There's no restrictions as to how much you use it. We don't charge owners a nightly rate or a management fee for using the property themselves. We charge the only fee that's levied on the owner is a cleaning fee, which guests normally pay to cover the cost of cleaning the property so that it's ready for the next guests. But other than that, there are no fees whatsoever, and it's a seamless process to block your unit for personal use. You can use your Client Zone portal, log in, select the dates that you want, save. You receive an automated booking confirmation by email. You can see that booking on your calendar, and you know that it's blocked for your use.
Okay. Yeah, and I think just so you guys know, in the chat on the right-hand side, there are a couple of things, but one of the things is the e-brochure. And in the e-brochure, we've done all the rental return forecasts off the back of occupancy projections and yields and all that kind of stuff. So it's quite interesting to see how those occupancies have been done. I think they've been done quite conservatively, but naturally, obviously growing. And we've done forecasts from year 1, year 2 through to year 5. And then, yeah, I mean, I think I bring Bronwyn just to bring you into this thing. I think first question is, what's the appetite like from the banks at the moment to lend? We're obviously seeing huge amount of positivity in the market. And then secondly, if someone's on this call right now and they are wanting to purchase come next Thursday at 11, what's the process they need to follow to try and either get pre-approval or to establish what the affordability is between now and then?
Sure. So the bank's appetite for lending at the moment, they are extremely hungry for business and extremely competitive. So if you are looking to finance your particular unit, the more banks that we can approach on the customer's behalf, the more guarantee they are of securing the best possible deal, interest rates wise, as well as the structure of the mortgage. So definitely finance the property wherever possible. And in terms of process, first step is to get pre-qualified. So off the bat, there's a 90% approval rate currently with Uber where the client has been pre-qualified. So I'm sure my details would be put in the chat box or sent out to everyone on the call. You're welcome to get hold of me from this evening. We can start the pre-qualification process. It takes 24 to 48 hours to secure the certificate. And that's your golden ticket essentially to proceeding with your offer to purchase. It guarantees the home buyer pretty much that they are good for the money.
Okay.
Okay.
Okay, cool. And then yeah, I mean obviously where guys are asking the question in terms of especially for guys investing for the first time in terms of the benefit of financing versus cash. I mean I know you unpacked it briefly there, but just maybe just unpack that again.
So there are a couple of tax benefits. Probably best to speak to a tax consultant regarding that. But where you are investing and there is potential for a rental return, it's best to have the property financed. And then obviously, if there's investors on the call, it allows them to free up their cash to use towards other possibilities that are out there instead of securing their units by tying up their cash.
Yeah, okay. Yeah, and I think there's so many questions coming through, which is awesome, and I'm going to get to a stage where we're just going to fire these questions to whoever's best suits on the chat. But one of the questions from an anonymous attendee, which says, when would I be liable for the full amount of the unit? And I think that ties in the benefit of buying off plan is you locking in your purchase price, your value now with a deposit, call it 10%. You're financing the balance and you're seeing the upside on that 10% between now and transfer, but not having to pay anything between now and transfer. I think that's exactly like you're saying, the ability to use banks' money to leverage the depreciation off the full purchase price, even though you've only invested 10% between now and then. Leon, sorry for bringing you now. But I think the big question, I think, what's the level of interest been like, and how overwhelming not overwhelming, but how encouraging has that been?
Oh, I haven't seen this, it's not a very big development, but I haven't seen this oversubscription in many years. I mean, we are flooded with inquiries. There's so many people, that's asking all the right questions. And, I think it's driven by, Steph, by value proposition. I mean, the whole package, the location, the price point, the possible yield projection, it's just such an attractive package that's available in Cape Town. And I think therefore the very big appetite. Oh no, it's massive, eh?
And Leon, we're going to open the marketplace in a sec, but just high level. I mean, just to talk a guy through, anyone who doesn't know the product as yet, just very quickly, the different options and what a guy should be looking out for when trying to make their selections.
Yeah, I think let's talk from the angle of being a guy looking for pure investment. Okay. So if we take a small unit at a low price point, your chances of getting a little bit higher yield on that unit is good. But the square rate pricing of that unit is going to be substantially higher than the big unit. So we know that return on investment is driven by two principles: the yield, the rental yield, plus the capital appreciation. The moment you go to the bigger units, the yield is a little bit lower, but there you buy, and you can go and do the calcs online. It is crazy what some of these big units are priced at, the square meter rate. It's so competitive and low. I mean, I haven't seen these rates per square meter 5, 6, 7 years ago. So the capital appreciation on those large units are going to be so much more than the small ones. So depending on, are you a more long-term investor, short-term investor, that will drive you towards which unit to buy. I can't say that this unit is much better than that unit because it's driven by two types of value propositions.
Yeah, I think it's exactly it. Exactly. You normally assume that the cheaper unit, it gives you better yield, but I think it goes back to what Andrew was saying earlier, is that different units are treated differently, and it's not all pooled. And then, like you say, you look at the capital appreciation off the different bases. So yeah, it's actually quite an interesting thing, and I think that's what we'll definitely go through that in a second, because I want you to almost pick out, if you were a buyer at certain price brackets, what are the units you should be looking for, and especially because I think there's some gems that guys don't necessarily see. I think guys generally go upper floors and sea facing, but there are a couple of other gems on the other side of the building. So yeah, we'll go through that. But guys, if I can just, I'm just wary of time. If I can just start going through some of the questions, and I really encourage anyone to post any question. We're going to try and get through as much as we possibly can. Danny, I think a lot of these will probably go to you. I'm going to start off. Steve Mayer, does a reservation fee form part of the deposit? And when will the deposit be required?
Yeah, it can be deducted from the deposit. The deposit is required on signature, and and then the bank process has to follow immediately, unless the buyer elects to rather pay 30% deposit, then they only have to provide the balance 30 days prior to handover. So two options: one, 10% down, and a bank bond within the allocated kind of 30-day reasonable time. And alternatively, if you don't want to place guarantees with a bank bond or other, immediately you can pay 30% and pay 30 days prior to handover.
Okay, so just to confirm, so on launch day via the marketplace, you're going to pay your 10,000 Rand reservation fee, and then you will sign your agreement, which will be pre-populated and sent to you. Then attorneys will call for your 10% deposit if that's how you're going, and that the 10% deposit will be 10% less the 10,000 Rand that you pay, your reservation fee.
It's a prepayment of a percentage of the deposit effectively, but your way of securing your unit in a fastest fingers first process, because we foresee so much oversubscription here. We need an allocation procedure, and the 10% deposit isn't an efficient one. So it's the 10,000 Rand deposit that becomes the early securing mechanism.
Yeah, okay, cool. And then another question from Stephen at this, Andrew, you can also come in here, is you mentioned other developments in Foreshore. How do the returns at Vanderbilt compare to other options in Foreshore? So maybe, I don't know, Danny, if you want to start, maybe Andrew can come in terms of returns and what that looks like.
Yes, I think, the live sample I have is next door at Rockefeller, where, through the cycle, the guys are kind of achieving 10, 11% unlevered returns. But that's in a much more formal hotel pool. Obviously there you don't have the luxury of then using your unit as and when required. So I think, back to Leon's discussion around yield versus capital appreciation, I think there's a third leg to that, is that a bigger unit, which may have lower yield, is also probably more likely a unit that people would use for a family holiday or a visit to Cape Town. So, being the fact that this sits in a Prop R pool or a Prop R managed solution, you can take that unit out as and when you need it for, family use, etc. So another reason why we foresee the bigger units being, very sought after here. But yeah, at Rockefeller, we're seeing live, we've got a live example at kind of, in excess of 10% unlevered yields.
Okay.
Yeah, I mean, from our perspective, amenities are a big driver of bookings and booking performance and revenue. And Vanderbilt ticks those boxes very well. They're definitely differentials. So you can kind of stand out from the crowd, and that results in better returns in and of itself. The apart hotel model is also a great driver of revenue. With the apart hotel model, you take the sort of flexibility and revenue potential of traditional short-term rentals like Airbnb, and you combine it with hotel-like benefits, daily servicing, like you would have in a hotel setting, on-site support, very sort of seamless check-ins and booking procedure. And the result is, because of that sort of elevated experience for guests, and there is definitely there's a large number of guests who are now sort of seeking out that elevated service, is that you attract higher than average nightly rates. And because we also have the ability to host one-night stays, which you don't typically do with a short-term rental property, those one-night stays act as amazing sort of gap fillers in your calendar, and you're also meeting an obvious need in the market, because historically, if you want one-night accommodation, your only real option has been a hotel. But now, you can have a short-term rental property that's sort of managed like a hotel. And the result is that we have much higher occupancy in our apart hotel properties compared to sort of typical short-term rental properties, along with higher than average nightly rates. So the returns are very favorable. And I do think that the Vanderbilt, I mean, from our experience, it's a very unique opportunity to enter the market at an unusually low price point. And basic principles of investments, the lower that initial capital outlay, the better your returns are going to be. So yeah, everything's looking very positive from our side. And yeah, like we've alluded to already, there's definitely the potential to outperform those baseline estimates. We obviously want to be conservative and set realistic expectations with the possibility of outperforming those expectations.
Yeah. And I find it quite interesting chatting to you guys quite a lot in recent times about on newer builds, we're seeing higher occupancies and higher rates, just because of that demand for modern finishes and so forth. So I think that the beauty is combine a new build at the right price with fresh facilities, and I suppose it bodes pretty well. Guys, I'm just jumping into a few more questions. Josh Eberly, and I think it overlaps quite a lot in terms of parking. I think it's quite important for us just to unpack that. So the question is, do the units come with a parking bay? If not, is there ample parking available? And that also overlaps with a couple of questions from Al Fasahi and a few others. So Danny, if you can just talk about that.
So, zoning requirement is no parking, and the building itself does not have parking within it. But we obviously have and continue to operate right next door with 406 odd rooms. That hotel also with no parking. So what we have done is we've contracted basement parking on 2 adjacent properties, which are available to rent at reasonable rates, in the region of sort of 12 to 1400 rand per bay per month, depending on which site. So there's ample parking available in the precinct, but not specifically in this building. So.
Got it. And then and then I think maybe sort of Andrew from your side. So there's a question here from Josh also about, okay, apart from levies and rates, which we all know, I think, are there any other costs that one has to consider? And I assume he's referring more to if you were doing the short-term managed solution, other than your management fees and other than the rates and levies that an owner would need to pay as part of sectional title ownership. What else do guys need to take into consideration?
I mean, if you're looking at the full picture, all of the platforms that we use to market your property charge a platform fee, so Airbnb, Booking.com, like a Slap, etc. Your normal running costs are things like electricity, Wi-Fi, Netflix. From in terms of our service, our fee structure in totality is our management fee, which is charged on it's commission based, so it's charged on the booking value. And then we also provide all of the linen for the property at a fixed monthly rate, based on the size of the property, and that's it. Unless there's ever any sort of the only sort of unforeseen costs would be things like maintenance. Everything else is covered from our end.
Okay, perfect. And then Leon, levies and rates comes up quite a few times. So I'm just almost bundling a couple of questions. How would a guy, I mean, obviously it's in the brochure and stuff like that, but just a high level in terms of how levies and rates are calculated?
Yeah, so we look at typical levies at more or less 52 Rand per square meter. So depending on the size of the unit, you can just do that calculation. And the rates obviously are based on the formula given by, the local authorities on a yearly basis. But if we look at the smaller units, we're starting that at about 750 Rand per month and stepping up as the units get bigger to the bigger ones at more or less 3,200 Rand a month this year. Yeah.
Okay. And then just quickly in terms of furniture package costs, so Sunday's asked for, and also security. I think a lot of guys have asked questions around security, the area and so forth. Maybe just cover those two.
So I
So
think
you're asking me?
yeah.
Yeah, well, either or, maybe Danny or
I'll deal with
Leon.
security. I think Leon can deal with furniture packs. So from a security point of view, there's obviously existing 24-hour security inside the precinct, which at the moment looks after the Rockefeller, but additional guarding will be provided and as budgeted for in these levies, and that team will work together because this whole precinct forms part of the same homeowners association. In Rockefeller, we have a full security control room and CCTV room that's manned 24 hours. So additionally, the cameras in this building will be added to that. And, security it benefits from scale, and this building will bring additional scale to both the manned, actual security team as well as the CCTV and electronic security infrastructure in the precinct. So yeah, we've run the existing buildings pretty much, incident free for a long time now. So there's no, major security concerns as such. And there'll be additional security from having an additional building and additional levies to cover additional security costs. So I think that hopefully answers that. Maybe Leon can, add something around the furniture packs, which obviously are curated as rendered, and he'll give you some indication around the pricing and how that works.
Yeah, I think the furniture packs is designed in collaboration with our management agents, Prop R, to be on the same level as the typical overseas clients who will visit us expect. And they step from, I think, 126,000, I can't remember everyone now offhand, stepping up to about 180,000 Rand per unit. But we must understand that it's a high spec product that we're putting in there, typical, related to hotel spec for the clients. Yeah. So it's a high quality product.
It's furnished as rendered. So each piece in that render you see behind Leon is the actual furniture provided.
Yeah.
So I mean, that gives you the indication of the level. It's stone tops and really high quality furniture. And then if the hospitality pack is elected to be taken, it goes right down to all of Propar's requirements with regards to cutlery and crockery and every item that they need inside the self-catering kitchen. So all of that's been catered for and dealt with down to the toaster and the knife and fork.
Yeah, if I can just chime in there from our perspective. Yeah, over the last few years, the short-term rental market's become increasingly competitive. I think that's no secret. And the goal is very much to furnish a property in a way that appeals to the widest pool of potential guests. Not to make it too quirky or whatever it may be, or something that might be polarizing for potential guests. And that very much results in the potential to achieve higher average nightly rates, more conversions, and that traction is sort of very much the secret sauce to doing short-term rentals. And this furniture pack very much ticks that box. So we're quite excited about that.
Yeah, I think those packs are looking unbelievable.
Yeah.
And I think so. It's so different, and I think that's one thing. I think the guys have done unbelievably well to differentiate the product in terms of color and various different other things. So yeah. Danny, one of the last questions. Michelle Grove asking, will the building be internally linked to the Rockefeller?
Courtyard linked. So there is a link between the buildings, but not internally as such. There's a walkway between the two. So yes, it's a precinct of individual buildings with a central courtyard between the two. So there will be access, but not linked as such,
Okay. Uh, yeah, sorry, I don't want to jump around with questions, but there are a lot of really good questions.
No problem.
Furniture pack, can you mortgage it? Is it included in the purchase price? And if not, when do you need to pay for the furniture pack?
It's not mortgageable generally, but banks will certainly make certain concessions for certain clients. So it could be, by arrangement, but not as such mortgageable. The furniture requires a 30% deposit and the balance 30 days before handover. So, it's not that you have to pay it all now. It can be paid over time. And but not mortgageable as such. Most of the banks specifically preclude furniture from being mortgaged.
Okay.
Because obviously in a drawdown situation, it's very easy for people to remove that. So the banks simply don't like it.
Okay. And then, Bronwyn, just a quick thing. I mean, I think we know that a lot of investors have got private bankers and so forth. And I think the assumption normally is using their own private bankers, it's easier and more efficient. But I mean, is an argument to shopping around based on the fact that banks are as competitive as they are at the moment with rates?
Absolutely. Absolutely. So you'd be doing yourself a disservice if you only approached your own bank. Everyone's of the assumption that they would secure the best deal from their own bank. It's categorically not the fact. Unless you shop around, you're never guaranteed of the best deal. And it also stems beyond just beyond pricing. It's around the package of the entire mortgage. So does the product actually align to the customer, or is it just the basic mortgage structure that's being offered? So unless you're shopping around, you're never guaranteed of the best deal. And the banks are hugely aggressive at the moment. So pricing perspective, definitely shop around. And our service comes at no additional cost to the home buyer. So it's a no-brainer.
Okay, and then just to clarify, I mean, I'm going to ask our team just to share your details on that chat together with the pre-qualification. I think it makes sense for guys just to be able to chat directly to you. But just confirm, that's a process that you guys will deal with from start to finish, hey?
Start to finish. So from pre-qualification stage, from name and number, we will be in touch with the buyer, take them right through until registration.
It's also important to note, Uber have taken every single unit here to every one of the banks to pre-approve the valuation at which it's been sold. So when they take a buyer to those banks, they've already had the actual unit approved. So the banks know the unit, know the price it's been sold for, and have pre-agreed to that. So the process is just far quicker when you're dealing with the originator who's embedded and entrenched in the product and the development already. When you go to your own bank, it's now they've got to go find this specific development and who had done the prequels. Bronwyn and her team are living and breathing this product and know exactly who at each of the respective banks have pre-qualified the actual product, not the specific buyer, but the product before that buyer arrives. And that speeds up the process and provides pre-comfort for the banks and generally leads to lower borrowing rates.
Okay, thanks, guys. And a couple of questions. And so I want to leave literally the last few minutes just to go through the marketplace and bring Leon in there. But Danny, I just wanted to have two questions. One is just to list again the facilities within the Rockefeller that Vanderbilt owners and tenants will have access to. That's number one. And secondly, from a view perspective, I think we know. And if you go through the marketplace and you see the different views from fifth floor up, fifth, sixth, and seven, you've got harbor views. Then the question would be that there is that vacant piece of land in front. What does that mean for potential views in future? Yeah, so if you could just maybe cover those two.
Okay, so amenities wise, there's Rockefeller Plaza, which is the restaurant inside the Rockefeller, which is still owned and operated by the developers of Rockefeller and will be for the foreseeable future. So that's buffet breakfasts available to guests of short-term letting teams at the Vanderbilt, daily breakfasts and lunches and dinners, which are a la carte, the latter two. There's the spa inside the building. There's the roof pool and adjacent bar. There's the bookable conference venue, conference facilities, and meeting rooms, lounges, and gym. The building obviously forms part of the same homeowners association, and there will be a contribution from Vanderbilt's levies into the shared pot of the homeowners association, which then allows, for Vanderbilt to contribute to Rockefeller's amenity maintenance and vice versa. And again, with scale comes benefits for both buildings, security-wise, amenity-wise. And obviously this building has its own amenities in convenience store and deli, which Rockefeller's buyers and visitors see the benefit of. So, this is better together, and these precincts just tend to work better and better as more buildings are added and additional amenities are brought to the market. And that's what this will do for Rockefeller and vice versa. With regards to the stand in front, it's council land. Obviously, we can't talk for how long it remains undeveloped. What we do know is it's recently been rented on a 3-year lease. So, that 3-year lease could not give rise to the building of a high-rise building or anything like that there for at least 3 years. And so for the foreseeable future, it's a piece of land. But again, views are not guaranteed, and we can't sit here and say that it could never be impeded. But for now, that is a piece of council land that is let on a short-term lease, which is 3 years, as far as the information we have available.
Cool, got it, thanks. Martin asked if we will be recording it. He joined late. I'm sure there are quite a few of you who've joined late. So just a reminder that there will be a recording that'll be done of this and we'll be circulating that to you tomorrow. And you'll have the ability to go through all the questions that have been answered. Okay, Leon, I want to put you on the spot. Okay, so I think what I want to go through, and I think just for everyone's purpose here. So I think for any of you who haven't been onto the marketplace as such, I think you can see in terms of from a countdown perspective, you can see where we are in terms of 6 days, 16 hours, and 5 minutes away from launch day. We've tried to make an interactive tool that allows you to take all the information away with you in terms of being able to go into the tool and view in priceless format, so you can see exactly where the pricing is. I think we have been quite clear about the fact that Easy Properties, who basically, or as an entity who basically have a collection of investors, they were super bullish about the project, and they were given 7 units, which they have done a raise on with their investors. So those have been marked off as 301 through to 309 that won't be available for sale on launch, but everything else is available for sale on a fastest fingers first basis. So you have the ability to go through a price list or floor plan or unit view. You can see what the launch discount is on launch day, and then you obviously have the ability to add this to your wish list. But just so you guys are clear that you have the ability to able to go in, and if you want to sort of look for a specific option in terms of if you want to look at studios, for example, and you want to then go into a specific unit size. So, for example, if you're looking for 31 squares to 36 squares, or if you want to narrow down the price, it's continuously narrowing down the opportunities that exist within that. And if you want to view that in floor plan mode, obviously highlighting where those different floor plan options are. And then the ability to go into a specific unit in terms of being able to view the view from that particular unit, the renders for those specific units, the floor plan or the unit plan, the facilities that we spoke about at Rockefeller in terms of rooftop pool, the restaurants, the gym, etc., etc. And then obviously with regards to every single unit, we've got a breakdown of levies, rates, schedule of areas, facilities, and the furniture packages that are available to that. And then again, where that's highlighted within the offering. So come launch day, and I would highly recommend you guys going through this and starting to understand which options may work for you come launch day. And then to be able to go and wish list accordingly, which I think will make a huge difference in terms of being able to narrow down your options. And then we will come launch day. Obviously, you'll have the ability to go directly into the purchasing option and be able to purchase online off the back of that. But I think, Leon, if I can just ask you, in terms of being able to go through from your side in terms of what you envisage, if for someone to be able to look if you're starting from scratch and you're looking at any specific options, you look at all these floor plans together, where should one be looking, and where do you think are the hidden gems come launch day?
Yeah, so my first advice to everyone online will be, do not make the mistake that we've seen so many times during launches and just go for one unit on your list. Because I guarantee you, you might not have the fastest thing in South Africa. A list of top 5 units you prefer, and that you can literally run to the second one if you were not the first to click your first choice. Okay, so that's number one. Make sure that, and even if you have another device next to you, do that. That will assist you in the cattle run. Okay. Steph, it's very difficult to say which units are the best units because it's driven by the argument of, are you a yield-driven guy, or are you a capital appreciation guy, or are you someone who wants to use this unit on a very regular basis for yourself? So, I don't know in which category you fall. And you might be someone who put a very big emphasis on a specific view, but the units on the backside looking towards the mountain, I mean, their pricing is so incredible. So, you've got that variety on super low prices and super low rate per square meter, which you don't often find in any new top-end development like this in such a precinct. So it's very difficult. At the one, it was much easier for me to say which units to go for. But here, I can't find any unit that hasn't got a very, very strong argument why you should buy it. So yeah, it's not easy to recommend anything really.
Okay, and Danny, I mean, if you want to add there at all in terms of if you were looking at launch
What
day,
we,
what floor would
you
you
know,
be
what we've
looking at?
seen, what we've seen historically in all these buildings is, the best is the easiest to sell. So, you know, premium units on the higher floors, like things that come to mind, unit 702, 703, well positioned, still well priced, high up on the buildings. There's always an extra gravitas to owning on the top floor of these buildings. Here, they're not priced at such a premium. And that's where I'd be looking, sixth and seventh floor on the sea facing side. If you look, on the Rockefeller side of the building, the views are much less likely to be impeded over time because the buildings that are built there are likely to be there forever, and for the foreseeable future there will be no additional issues or buildings coming up in those view lines. So from my point of view, yeah, sixth and seventh floor, sea facing on the Rockefeller side of the building would be where I'd be looking. Even though they're slightly more expensive, I think you'll be well served over time. Additional questions I was just running through on the chat just so we do answer everybody's questions. I know someone was asking who the conveyancers are. It's Shelley at Strauss Daly in Cape Town. Obviously, large reputable firm. We've worked with them extensively in the past. So that's the contact person there. And then someone else asked about Wi-Fi and fiber in the building. Again, scale benefit. We have a large fiber network in the existing precinct in Rockefeller with large backhauls already. So we'll be adding onto that system and thereby providing very cost-effective fiber to buyers here on the back of the existing network at Rockefeller. So those were just two questions I saw that hadn't been answered, and I thought let's deal with them quickly.
Cool, thanks, Danny. Yeah, and I hope that we've covered most of the questions. I know there was a question about multiple buyers for the same unit. Is fastest fingers first the only deciding factor? Unfortunately, it is, and I think that's why please chat to Leon prior to launch just to try and get the best possible insights. So Leon's details are shared here. I recommend that you phone Leon directly. There is obviously, you can go via the website. It's like a chat to Leon. He'll give you the best possible advice. And we really want to make sure that everyone has the best opportunity to get what they're looking for on launch day. And then I know there was a question around Bronwyn's details. So Bronwyn's details have been shared here on the chat, her email address and her contact number. Please chat to Bronwyn directly too. We want to make sure that, like we said, that by being on this chat, you've got an inside track come next Thursday. But yeah, I mean,
Just on that, Steph, I just want to say if we have a precise, focus of the client, we can guide them, much easier towards a specific unit. So that one-on-one chat is crucial to land up, at the specific unit you actually want.
Yeah. Yeah, exactly. So 082-820-5342 is is the number. Keep Leon busy because I think we want to make sure that you guys all know exactly what you need to be looking for.
And I think, this is obviously reasonably small, this development, 77 units. I mean, it's not tiny, but no, you're not 500, like we've done in the past. But we have additional stock coming to the market, and we won't be able to accommodate everybody here, but we will in time. So stay close. I think Leon's around. Let him know what you're after, and we'll put you front of the queue for additional stuff in the future. We've got some exciting products that would service both the investor market and the buy to live coming in Cape Town, the Winelands, and a very large development coming early next year in Stellenbosch. So yeah, stay close to Leon. He's got all the information, and yeah, if we don't have enough stock here, we do have additional stock coming.
Yeah, some really exciting stuff. So I think a big thank you to everyone who's joined. I know the numbers have been very consistent all the way through. You've had a really, really great turnout, and it just underpins the level of demand. So good luck next week to everyone. We really hope that you get the units you want. I think we're super, super excited. I think it's been a collaboration from all different sides in terms of creating the optimal product. It works for the market, the right partners, and yeah, I think everyone's super excited. So thanks again also to our panelists. Thanks for your insights. Super, super valued. Like I said, please chat to Leon, please chat to Bronwyn. We'll send the recording out tomorrow, and there'll be a series of comms to everyone between now and launch in terms of stuff to remember, a tutorial on how to use the marketplace. There is a very, very strong AI-based chat on the website. If you've got any questions, please utilize that. There is also the WhatsApp that you guys would have received from Vanderbilt. Welcome to ask any questions on that chat, as well as being able to chat directly to the team. So you just want to try and make it as fluid as possible for all of you. But thanks for everyone's time, and I hope you guys have a great evening.
Thanks, Steph.
Thanks,
Thank you, guys. Thank you, everyone.
Cheers, guys. Cheers.
Thanks. Bye.